Hey everybody, welcome back to the channel. We are back with another episode of Daily Palantir, and on today's show, we are going to be talking about DeepSeek and the implications of what it means for Palantir. Let's get into it. So before we get into DeepSeek, which took away $600 billion of market capitalization from Nvidia yesterday, and as a result, a lot of other growth stocks like Palantir got hit as well, let's take a look at the day after that happens. Palantir. $80.39. I believe it hit a low of about 72.73 yesterday. Nvidia also recovering about 7% after falling 17% yesterday. But Palantir right back to $80.40. We have earnings coming up in about 5 days, February 3rd. We'll have a earnings preview episode coming later this week. But $80.38 right here. I think this is a great opportunity to discuss the implications of what DeepSeek means for Palantir, because quite frankly, I thought that yesterday was a testament to everything that Palantir has been talking about, everything that Shyam Sankar, the CTO, and CEO Alex Karp have been saying really for the past couple of years around what it means to think of large language models in the context of operational use cases. And given the news that came out of China yesterday, it kind of further consolidates and proves what Palantir has been saying, and quite frankly, the fact that they've been right for the past couple of years now. So what is DeepSeek? I'm not going to go into the entire history of DeepSeek, but because there's a lot to talk about, and I'm sure a lot of people have already heard, researched, watched a lot of stuff about it. In general, it is a company that is not a tech company. It's actually a part of a Chinese hedge fund that has about $8 billion under management. The founder of that hedge fund wanted to create an open source large language model similar to what Meta created with Llama. And so he hired 200 of the smartest people he could hire, gave them really competitive salaries, and told them to build. Now, they did not have access to the most sophisticated GPUs from Nvidia, which obviously is what's necessary to be able to train and create these large language models. Or so we have heard. They didn't have access to those GPUs. That one is still up in the air. But nonetheless, what they were able to do is spend about $10 million to train a model, even if they had the architecture with hundreds of thousands of GPUs to be able to set up the infrastructure in order to do that training. The actual inference training cost them about $6 to $10 million, which is pretty revolutionary. And from the sources that I read over the past couple of days, it is seeming to be confirmed that that's all it took for them to be able to actually build a model that is as competitive as OpenAI's GPT. Now, it's not better than OpenAI's GPT. It's not like the best model in the world, but it's pretty damn good. And so what has happened over the past couple of days is the market woke up and said, wait a second, why are we fueling so much money into these large language model creators, the Anthropics, the OpenAIs, the Geminis of the world, if the models themselves not only are commoditized, but can be given away for free via open source, which is what Meta has been doing for the past couple of years? Why are we attaching a premium to these companies? And a byproduct of that, because these venture companies like OpenAI and Anthropic can't be traded on the public markets. If they were, I would imagine their stocks would have taken a hit yesterday. The byproduct of that is Nvidia, which is essentially the proxy for all of these companies that have all this money to spend on Nvidia chips, took a nasty hit. And the reason it took a nasty hit is because the market started thinking, wait a second, is Nvidia really just a cyclical semiconductor stock that at the end of the day is selling chips to companies that don't really need those chips, or at least in the next couple of years are not going to need the more advanced version of those chips? And if that's the case, this whole AI revolution is awesome, but like, why are we giving Nvidia the $3.5 trillion valuation? And essentially that logic and that line of questioning led to the market taking away $600 billion from Nvidia last night. And then as a result, Palantir also fell 5%, just being grouped into a high beta growth stock AI trade. Everything kind of took a hit yesterday. Now, having said that, there's actually a lot of responses to that initial story that I just played out. And we're not going to go through all the responses. In general, there's this idea called Jevons Paradox, which has been going around, which essentially says, look, even if something becomes commoditized and there becomes economies of scale, meaning everyone's doing it, therefore the cost to do it gets cheaper, in this case, inference training, which is what the Chinese have figured out over the past couple of weeks. That doesn't deny the amount of demand that exists for the end result, in this case, AI and AI use cases, AI products. And in fact, it only enhances the demand for a lot of the products that have become commoditized. So, for example, the internet is a really good example. The internet was a super amazing thing. A lot of people started building a lot of things on top of the internet. and more products started being building, which commoditized existing products. But that doesn't mean demand for the internet in and of itself went down. It actually made demand go way higher. When you have different websites doing different things, even though they're the same website as this website, there's so many websites, so many people that want to create different applications, so many users that are now entering the internet and being able to access different products and resources on the internet, that it just made the internet more useful for our everyday lives. And Satya Nadella, CEO of Microsoft, who committed to be spending $80 billion of CapEx over the past week, which he will probably reaffirm tomorrow on his Wednesday Microsoft Q4 earnings call, he basically said, look, AI is going to be part of our everyday lives, and that means we're going to need to have more demand for the compute, aka Nvidia. Sam Altman also said this yesterday, CEO of OpenAI. And because all of that is necessary, the chips are still going to be a big part of this AI revolution. Nonetheless, whether you agree that DeepSeek is going to commoditize AI, large language models, or you think Nvidia has a massive bull case because obviously the chips are still going to be necessary to build more compute, what matters is the relationship that all of this has on Palantir. And I think this part is the really interesting part because it's something that CEO Alex Karp and CTO Shyam Sankar have been talking about for a long time. What has been Karp's number one point in the AI revolution? If you've listened to any interview he's done really over the past 18 months, the argument he's made for a long time is that large language models are incredible and they've changed the world, they've revolutionized the world, they've influxed a ton of demand into Palantir just because there's more and more people that care about the concept of AI. But that large language models at the end of the day are a toy. And in order to implement that toy in a sophisticated way, otherwise it will continue to just be a toy, you need to have security, you need to have governance, you need to have the ability to actually ground that model, that large language model, in a foundation of truth, aka an ontology, which is the source of truth for a business, aka Foundry. And so the large language model becomes largely irrelevant if there is not a way to ground that large language model in the context of a business, a BP, an Airbus, a Tampa General Hospital, etc., that then creates actual actionable results. And really, this has been a very simple thesis. Karp laid it out in an interview that we're going to watch a clip of about 5 months ago in September when the stock was actually $35. And he was talking about this concept of chips and ontology. And his main argument has been chips are important because you need the chips to be able to create the models that change the world, right? With these ChatGPT products and self-driving and robotics, and you need these models need to be created, and these models are important. But ever since Palantir came out with AIP, and the reason they were able to come up with AIP so quickly is because they recognized a long time ago the models are the commodity. The models are going to be many models, right? You're going to have GPT, you're going to have Anthropic, you're going to have Gemini, you're going to have Llama, you're going to have Grok, you're going to have DeepSeek, you're going to have so many different models. Where the value is going to lie is in the implementation of those models to create business use cases. And this is quite frankly what Dan Ives has been talking about for a long time as well. AIP layered on top of Foundry, Foundry being the application layer that actually has all the business data, logic, etc. inside of that ontology. AIP can become actionable and useful to create real workflows if the models are grounded in the logic of the business. But in order to do that, you have to have the logic of the business conducted in a meaningful way, and that comes down to the ontology, and that is not easy to do. Palantir has 20 years of experience and patents upon patents to try to build what it means to create an ontology for a business. So as a result, they recognized, I think about 2 years ago when ChatGPT first came out in late 2022, that this was going to revolutionize the world. This is why by April of 2023, Palantir introduced AIP, and by June of 2023, they had AIPCon. So about 6 months after ChatGPT went viral, Palantir decides, okay, this is the opportunity. The market wants AI. The market finally wants to transform their enterprise software applications in a meaningful way. AI is kind of the marketing to get people to care about that. But the ontology, what we've been building for the past couple decades, is really where the value is going to come from. And so they used AIP as a way to get people's attention via this whole AI narrative, but then they actually introduced the thing that makes AI actionable, and as a result, they have accelerated revenue growth back to 30%. Why does DeepSeek matter for Palantir? DeepSeek proved that the models are a commodity. That doesn't mean OpenAI can't be a very valuable company one day. That doesn't mean Anthropic's not going to be valuable. That doesn't mean what Google's doing with Gemini or Meta they're doing with Llama is not going to be productive and meaningful and valuable one day. It just means that if the cost to build these things starts to go down, the application layer upon which these models are implemented on is where all the value comes from. And quite frankly, this is how we've been justifying Palantir's valuation, at least on the channel, over the past over the past couple of months, because numerically I can't justify the valuation. Obviously, Palantir has to put up the growth to be able to say, hey, this valuation makes sense from a perspective of Palantir is going to grow into that valuation. And I think going into Q4 guidance, we're going to see what Q1 2025 looks like, and we'll get the numbers. But when you take away the numbers and you ask yourself, why is the street giving Palantir this valuation? Because I refuse to believe $200 billion of retail investors own the stock. Like, it's just not a Tesla, Amazon, Nvidia type of stock where the entire world knows about it. It's still very early when it comes to Palantir. And it's not a consumer product, so people can't touch it, people can't feel it. Like, at the end of the day, the institutions had to step in to be able to give Palantir the type of market momentum it's getting. My question is, conventionally, why is the street paying this type of a multiple for Palantir? And I think the answer might be that if the street is starting to realize that the models are a commodity and that all this CapEx spend is irrelevant, if there's not a use case, which we talked about on the Stargate video a couple weeks ago, or a couple days ago, I'll put that in the description, there is no actual value to AI. If the only value is what I think, which is FSD, self-driving, robotics, humanoid robots, and what models can be traded from those robotics platforms, and then enterprise software, and everything else is kind of a subdivision of enterprise AI software, self-driving, and robotics, then Palantir occupies a third of the three major categories when it comes to AI. Now, the foundation model creators might be seen as enterprise AI applications, i.e. an OpenAI, but now the street's thinking, well, wait a second, if China can do it for $10 million, 1/1000th of the cost, and there's probably more costs associated with it, but you get my point, that means that anyone can do this shit. And it's OpenAI worth $150 billion. Why? Losing $5 billion a year, not going to be profitable till 2029. Why is it worth this much? Why does this multiple matter? How are they going to grow into this? How are they going to become profitable? At the end of the day, they have to become a business to be able to deliver ROI. Well, the only way you justify OpenAI's valuation is that they're going to be the first to achieve AGI, which is cool. That's awesome. That's great. I hope they do achieve AGI. However, AGI is not what Palantir is going after. Palantir is going after real use cases inside of a hospital, inside of a company that underwrites insurance, inside of the NHS, inside of some of the largest manufacturing partners when it comes to Tesla, with Panasonic Energy, making the batteries for them in the Sparks, Nevada office, like the factory. The way Palantir is actually trying to build AI is by giving companies results that get more and more companies and governments to be like, hey, we need some of that Palantir. And Palantir doesn't have to train an LLM. They don't have to buy GPUs. They don't have to spend on CapEx, which is why their gross margins are incredible. All they have to do is take what those models are on the status quo, and there are probably hundreds of more models in the future. AIP just implements all those models inside of the software and then allows the enterprise clients to be able to use whatever models they want to use, which then goes back to the valuation. Why is the street paying this multiple? Because maybe the street's coming to the conclusion, and again, this is my assumption, I could be wrong, but maybe the street's coming to the conclusion of, if the models are a commodity, and even if the models are valuable, they will still be commoditized. What can't be commoditized is the way you implement the models, the way you use the models inside of software, the relationship you have with a customer that is willing to pay you $50 million a year. And if that's what Palantir is trading on, AKA the growth is going to come from Palantir being able to get more use cases in those models implemented into one day thousands and thousands of clients. Right now, Palantir only has 600 commercial customers. Well, wait a second. That's very valuable. Is that $200 billion market cap valuable? That's up to the market to decide. Right now, the market's saying yes. And I think it's because they're looking around and they're not seeing that many other software applications that are being able to create that much value. And so Palantir is left. And if Palantir is left, I think DeepSeek, what it means for Palantir investors is models are a commodity. And if models are a commodity, value comes from the implementation of the models. And if the value comes from the implementation of the models, then Palantir's growth trajectory comes from their execution of being able to get as many customers as possible to realize their solutions are the answer to transformative enterprise software, not, hey, let's plug in ChatGPT and let's see if it works, because that's not how it's going to work. You need an ontology, you need Foundry, you need to have that layered and securitized and governed in a certain way, and that's what Palantir is offering. So overall, I think this DeepSeek thing is very bullish. Whatever happens to the stock is more so a question of earnings growth, guidance, etc. But what really matters, in my opinion, is, wait a second, everyone felt that the models were a commodity, yet everyone kept hyping up the models. And it took an event like yesterday, which I don't think is the end of Nvidia by all means, but it took an event like yesterday for people to realize the models might not be as important as we thought they were, and our intuition of them being commoditized is starting to become true. So where is the application layer where these models are going to be implemented? Oh, that's a Palantir. Oh, is Palantir commodity? No, Palantir actually has some software that's very hard to commoditize. The relationships they have are almost impossible to commoditize. And if Palantir can keep executing on the business front, these models that OpenAI is spending billions of dollars to make, they're just going to be implemented in one click into Palantir's software. And now you get the actual use cases that are worth hundreds of millions of dollars, if not billions of dollars. And as a result, that's why I think Palantir is getting the momentum that we're seeing currently right now. All right, that's it for me. Two things I want to play before you end this video. Number one, CNBC mentioned Palantir yesterday, and I thought it was a pretty interesting way in terms of how CNBC mentioned Palantir and the idea of Alex Karp kind of being happy that the world is recognizing that the models are a commodity. And then number two, short clip from Palantir's Alex Karp CEO in a interview a couple months ago talking about how the models would be commoditized. Thank you guys for listening and watching. I'll see you guys in the next one.
To Josh's point about the large language models, I'm a big fan of Alex Karp. I'm sure he's kind of laughing today at Palantir because he's been saying forever, LLMs are the commodity. It's what you build on top of that is what's going to create the return. And so if Masa and Larry Ellison and Sam Altman are building all these data centers to go just infer for OpenAI, I think you call that into question.
So AI is a mysterious revolution. People basically have it wrong. They think all the values in the large language models. Large language models are like hydrocarbons in the ground. They need to be processed. If you're going to do something beyond chat, something that is crucial for the business, like bringing hydrocarbons out of the ground, or actually in the government context, monitoring troops, figuring out how to kill your adversary while staying alive, that raw knowledge has to be processed and put in your system, in the logic of your system, and in the security model of your system at the cost your system wants to pay for a particular kind of model. So long story short, that hydrocarbon-like LLM is essentially worthless to your business without the processing capabilities, both in the ontology and in Foundry. And we believed this 5 years ago. We figured this out, by the way, by doing work for the U.S. government. Some of that work is going to be presented today. So if you want to really kill your adversary on the battlefield or change the economics of your business, you need a way of processing the raw resources.